After surging takeout demand in 2020 because of COVID-19, our next guest says sales of pizza are returning to some semblance of normalcy in 2022, and she predicts strong growth ahead for the carryout sector. Bank of America analyst Sarah Senatore joins us now. Sarah, it's good to see you. Thanks for being here. Pizza has been a really interesting space, actually, over the last couple of years. What does normalcy look like when it comes to this business?
Yeah, you're right. For a segment that's been around for a very long time, and for most of us, it's sort of a part of our kind of, if not daily, weekly, or monthly existence. There's been a lot of change over the last couple of years, primarily catalyzed by COVID, I think. And, as you said, we do think that most of that was transitory, and we're getting back to a point that looks a lot more like it did pre-COVID, at least with respect to kind of the rate of consumption or how people are accessing pizza with respect to, carry out versus drive-through. But pizza, like every other part of the restaurant industry, really saw a huge change with the onset of COVID in 2020 as everybody shifted to more at-home consumption. And of course, the large pizza chains, that's really their stock in trade, is getting food to people to eat at home. So a big tailwind from like I said, from a consumption perspective, certainly early on. But, we've given a little bit of that back more recently. And I think now we're seeing kind of collectively kind of 3-year trends or growth rates that are very consistent with what we saw before the pandemic hit.
Sarah, who's winning the pizza category on the third-party delivery side from your analysis?
People who use aggregators are very loyal to the aggregators they use. And I think that's only been amplified by the subscription services. So what we see is that among the restaurant companies, when they partner with aggregators, they usually choose to partner across the board with all of the aggregators because they find that there really is incrementality with each aggregator platform because they have a different customer base, whether it's because of geographic strength or just, kind of habit or certain other preferences that consumers have. So it's, I think, less about, which aggregator is winning within a specific space and more from a restaurant's perspective, the aggregators, what they offer in terms of access to customers.
Sarah, why have the burger and French fry stocks outperformed the pizza stocks this year, and can that continue next year?
I think it is really a function of this normalization that we've been talking about. So when you think about pizza consumption, a real sort of significant amount of pull forward, if you will, 2020 and into 2021. So we're seeing a bit of that correction or adjustment. The same store sales growth, at Domino's is now on a 3-year basis, 17% for the industry. So for the overall business. So 17% over 3 years is a pretty healthy, robust number. It ends up averaging, somewhere in the 5.5% range. That's very consistent with what, previous run rates were. It's just that it has been distributed unevenly. So slower than that this year, although we're certainly seeing recovery and faster than that in the prior 2 years. So I think that is different from some of the other QSRs that have seen more what I'll call level loaded, sort of more consistent growth, not as fast in 2020 or 2021 as the pizza restaurants, but faster in 2022. And again, I think, what we'll see as we look out next year is that a lot of normalization has happened, and we should expect virtually all the restaurants to kind of reconverge on their historical rates. So faster for the pizza restaurants and potentially slower for some of the others.
Bank of America analyst Sarah Senatore joining us today. Thanks so much for the pizza and other fast food analysis as well. You got us all hungry and ready for lunch here. Appreciate it, Sarah.